discounts that you have, but the big question right now is, will they pass on the full amount of rate cuts we might see this year? In my opinion, they'd be mad not to. CBA just posted a huge profit for the first quarter of this financial year with $2.5 billion. NAB, Westpac and ANZ have all posted slight decreases in their most recent results, but they're still making billions of dollars. And yet in the meantime, as of August last year, 2024, more than 2 in 5 home buyers reported struggling to pay for their home loans. That means up to 1.4 million Australians are facing mortgage distress. This is the highest level since they began tracking in 2019. Now, it's not to say the property market is going to completely drop or something catastrophic is going to happen. It's just more and more people are feeling the pinch with the cost of living crisis going through right now. I'd be surprised if the major banks didn't pass on the first full rate cut when it does happen. And if they don't, it could be time to find a new lender. But before we get to that, let's take a look at what you can do to get your home loan rates down. As the rates start to come down, your default minimum mortgage repayment will also reduce. But if you can keep the repayments at the same amount, i.e. you keep paying as if the interest rate's higher, but actually the minimum repayment goes down, you'll be chipping away at the principal much faster of your loan, which means you pay less interest over time and you're gonna pay off that home loan way quicker. Most banks will automatically keep your repayments the same unless you ask them to lower it. So unless you really need the cash, sticking to the old amount can be a really smart move. It may not seem like a lot at the time, but let me show you a quick story on how this helps one of our clients. A few years ago, Lisa had a $400,000 mortgage at 5% over 30 years. After a rate cut of 0.5%, her minimum repayment dropped by $35 a month, but Lisa kept her repayments the same, which meant she was able to pay an extra $420 in principal that year. That may not sound like a huge amount, but over the life of the loan, she's set to save over $10,000 in interest. Think about what you could do with 10 grand. It's holiday or a safe net, it's huge. On the other hand, if you're feeling the pinch and you prefer a bit more flexibility, you can consider putting those extra savings into an offset account or the redraw. These accounts let you keep access to those additional savings, that $400, without committing the funds, meaning you can still get them back if you need. An offset account is just a regular account linked to your mortgage where any balances offset what you owe. A redraw account lets you make extra payments on the mortgage and still access those funds if you need them. They're both awesome tools to help you save on interest costs while keeping your savings within reach.